Hey, welcome back to the show, everyone. Today, we're unwrapping the latest financial performance of a company that's become a household name in India, Nykaa or FSNE-Commerce Ventures Limited.
That's right. Nykaa, a major player in the beauty, wellness, and fashion e-commerce space. They operate through their online platforms, physical stores, and also have a portfolio of owned brands. It's quite a dynamic business.
Absolutely. So, we've got their audited standalone and consolidated financial results for the quarter and financial year ended March 31st, 2025. The Board of Directors approved these results on May 30th, 2025. Let's start with the big picture, the consolidated numbers. How did they do?
All right. Diving into the consolidated financials for FSNE-Commerce Ventures Limited. For the fourth quarter of financial year 2025, Q4 FY25, revenue from operations stood at 2,061.76 crore rupees. That's a solid jump year-over-year from 1,667.98 crore rupees in Q4 FY24. Now looking at quarter-over-quarter performance, revenue in Q4 FY25 was 2,061.76 crore rupees, a slight dip from 2,267.21 crore rupees in Q3 FY25.
Okay, so strong year-over-year growth in revenue for the quarter, but a sequential dip from Q3. What about for the full financial year?
For the full financial year 2025, FY25, consolidated revenue from operations reached 7,949.82 crore rupees. This is a significant increase from 6,385.62 crore rupees in FY24, a healthy growth trajectory for the year.
That's a good annual growth. Now let's talk profitability. How does the Ebitda look on a consolidated basis?
Okay, for consolidated Ebitda, in Q4 FY25, Ebitda came in at 133 crore rupees. Year-over-year, this is a strong increase from 93 crore rupees in Q4 FY24. Quarter-over-quarter, Ebitda in Q4 FY25 was 133 crore rupees, down from 141 crore rupees in Q3 FY25. For the full year FY25, consolidated Ebitda stood at 474 crore rupees, up significantly from 346 crore rupees in FY24.
So, a similar pattern for EBITDA as revenue in Q4, up year-over-year but down quarter-over-quarter, and strong annual growth in EBITDA. What about profit before tax or PBT?
Consolidated PBT. In Q4 FY25, PBT was 39.55 crore rupees. Year-over-year, this is a substantial improvement from 19.56 crore rupees in Q4 FY24. Quarter-over-quarter, PBT in Q4 FY25 was 39.55 crore rupees, down from 44.56 crore rupees in Q3 FY25. For the full year FY25, consolidated PBT was 127.45 crore rupees, a very healthy increase from 69.02 crore rupees in FY24.
Wow, PBT almost doubled year-over-year for Q4. That's impressive. And how does this translate to profit after tax or PAT on the consolidated side?
Consolidated PAT, net profit for the period. In Q4 FY25, PAT was 19.05 crore rupees. Year-over-year, this is a significant jump from 9.07 crore rupees in Q4 FY24. Quarter-over-quarter, PAT in Q4 FY25 was 19.05 crore rupees, down from 26.41 crore rupees in Q3 FY25. For the full year FY25, consolidated PAT was 72.07 crore rupees, a substantial increase from 39.74 crore rupees in FY24.
Good growth in PAT as well. And what about the earnings per share, the EPS for the consolidated entity?
For consolidated EPS, basic and diluted, in Q4 FY25, it was 0.07 rupees. Year-over-year, this is up from 0.02 rupees in Q4 FY24. Quarter over quarter, EPS in Q4 FY25 was 0.07 rupees, down from 0.09 rupees in Q3 FY25. For the full year FY25, consolidated EPS was 0.23 rupees, up from 0.11 rupees in FY24.
Okay, consistent story there. Any significant other income we should note for the consolidated results?
For consolidated other income, in Q4 FY25, it was 8.95 crore rupees, up from 7.06 crore rupees in Q4 FY24. Quarter over quarter, it was up from 5.53 crore rupees in Q3 FY25. For the full year FY25, it was 27.26 crore rupees, slightly down from 29.94 crore rupees in FY24. So, a bit of a mixed bag annually, but up sequentially in the last quarter.
Right. Now, before we move to standalone, let's quickly touch upon profitability margins for the consolidated business.
For consolidated Q4 FY25, the EBITDA margin was around 6.5%, 133 crore rupees EBITDA on 2061.76 crore rupees revenue, which improved from 5.6% in Q4 FY24. The net profit margin for Q4 FY25 was about 0.92%. For the full year FY25, the EBITDA margin was around 6.0%, up from 5.4% in FY24. The net profit margin for FY25 was about 0.91%. So we're seeing margin improvement both quarterly and annually.
Good to see those margins ticking up. Any exceptional items in the consolidated results?
The consolidated results don't list any specific exceptional items, which suggests the numbers are fairly clean from that perspective. The significant movements are driven by operational performance and strategic initiatives like acquisitions and demergers, which are detailed in the notes.
Now, let's shift focus to the standalone financials of FSNE-Commerce Ventures Limited, the parent company. What's the story there?
Okay, for the standalone financials, for Q4 FY25, revenue from operations was 88.57 crore rupees. Year over year, this is down from 102.41 crore rupees in Q4 FY24. Quarter over quarter, revenue in Q4 FY25 was 88.57 crore rupees, down from 119.14 crore rupees in Q3 FY25.
A dip in standalone revenue for the quarter, both year over year and quarter over quarter. What about the full year?
For the full financial year FY25, standalone revenue from operations was 419.95 crore rupees, up from 312.52 crore rupees in FY24. So, an increase annually despite the quarterly dip.
Interesting divergence there. How about profitability on the standalone side? Let's start with PBT, as EBITDA might not be directly comparable or available in the same format.
Right. For standalone PBT, in Q4 FY25, PBT was 20.20 crore rupees. Year over year, this is a significant decrease from 52.94 crore rupees in Q4 FY24. Quarter over quarter, PBT in Q4 FY25 was 20.20 crore rupees, down from 31.48 crore rupees in Q3 FY25. For the full year FY25, standalone PBT was 97.29 crore rupees, slightly up from 93.92 crore rupees in FY24.
A notable drop in standalone PBT for Q4 and the standalone profit after tax?
Standalone PAT. In Q4 FY25, PAT was 14.62 crore rupees. Year over year, this is down sharply from 86.31 crore rupees in Q4 FY24. Quarter over quarter, PAT in Q4 FY25 was 14.62 crore rupees, down from 24.46 crore rupees in Q3 FY25. For the full year FY25, standalone PAT was 97.36 crore rupees, down from 121.02 crore rupees in FY24.
That's a considerable fall in standalone PAT for Q4 and also for the full year. What about the standalone EPS?
For standalone EPS,
Basic and diluted, in Q4 FY25, it was 0.05 rupees. Year over year, this is down from 0.30 rupees in Q4 FY24. Quarter over quarter, EPS in Q4 FY25 was 0.05 rupees, down from 0.09 rupees in Q3 FY25. For the full year FY25, standalone EPS was 0.34 rupees, down from 0.42 rupees in FY24.
Okay. The standalone picture for Q4 and for the full year on profitability looks quite different from the consolidated one. What about other income on the standalone side?
For standalone other income, in Q4 FY25, it was 37.34 crore rupees, down from 61.45 crore rupees in Q4 FY24. Quarter over quarter, it was down from 41.01 crore rupees in Q3 FY25. For the full year FY25, it was 157.33 crore rupees, down from 184.64 crore rupees in FY24. This decline in other income seems to be a contributor to the lower standalone profits.
That makes sense. Any exceptional items on the standalone front?
No explicit exceptional items listed for standalone either. However, Note 2 in the standalone results is very important. It details that the prior period figures have been restated. This is because the company acquired athleisure and lingerie business and western wear and accessories business from Nykaa Fashion Limited, a subsidiary, during FY24 and FY25 respectively. These are common control business combinations accounted for using the pooling of interest method, effectively restating past figures as if these businesses were always part of the standalone entity. This restatement itself significantly impacts comparability of standalone figures if one isn't aware.
That's a critical point for understanding the standalone numbers. Let's look at the balance sheets. What are some key highlights, starting with consolidated?
On the consolidated balance sheet as of March 31st, 2025, total equity stands at 1,342.66 crore rupees, up from 1,281.04 crore rupees a year ago. Key assets include inventories at 1,417.54 crore rupees and right-of-use assets at 329.86 crore rupees. Borrowings, non-current plus current, are around 961.36 crore rupees. Trade payables are significant at 634.83 crore rupees, combining dues to MSMEs and others.
And the standalone balance sheet?
On the standalone balance sheet as of March 31st, 2025, total equity is 1,659.61 crore rupees, up from 1,534.91 crore rupees. A very large component here is investments, primarily in subsidiaries, at 935.07 crore rupees. This is expected for a holding company structure. Standalone borrowings, current, are 75.74 crore rupees. Cash and cash equivalents are low at 5.50 crore rupees.
How about cash flows? What do they tell us, starting with consolidated?
For consolidated cash flows for FY25, net cash generated from operating activities was very strong at 466.63 crore rupees, a massive improvement from just 0.25 crore rupees in FY24.
Net cash used in investing activities was 205.43 crore rupees, mainly due to purchase of PPE, intangible assets, and investments in subsidiaries, though offset by proceeds from deposits. Net cash used in financing activities was 212.04 crore rupees, primarily due to repayment of lease liabilities and interest, offset by proceeds from borrowings and equity issue. Overall, there was a net increase in cash and cash equivalents by 49.16 crore rupees during FY25.
That jump in operating cash flow is quite something. And for standalone cash flows?
For standalone cash flows for FY25, net cash from operating activities was 142.58 crore rupees, a huge turnaround from cash used of 31.19 crore rupees in FY24. Net cash used in investing activities was 146.09 crore rupees. This includes significant investments in subsidiaries, 287.93 crore rupees, and purchase of assets for the acquired businesses, 137.14 crore for business acquisition consideration plus other PPO or intangibles, but also large proceeds from loans repaid by subsidiaries. Net cash from financing activities was 7.57 crore rupees. Net increase in cash and cash equivalents was 4.06 crore rupees.
Now, let's dive into the segment performance for the consolidated entity. Nykaa has beauty, fashion, and others. How did they fare in Q4 and FY25?
Okay, looking at the consolidated segment performance from the detailed financials. For Q4 FY25, beauty segment, revenue 1,894.76 crore rupees, up from 1,520.21 crore rupees in Q4 FY24, down from 2,060.01 crore rupees in Q3 FY25. Segment result, PBT before unallocable items, 103.56 crore rupees, up from 73.77 crore rupees in Q4 FY24, slightly up from 100.31 crore rupees in Q3 FY25. Fashion segment, revenue 161.00 crore rupees, up from 145.35 crore rupees in Q4 FY24, down from 199.00 crore rupees in Q3 FY25. Segment result, a loss of 36.44 crore rupees, larger loss than 29.14 crore rupees in Q4 FY24 and larger than 25.41 crore rupees loss in Q3 FY25. Other segment, international, revenue 6.00 crore rupees, up from 2.42 crore rupees in Q4 FY24, down from 8.20 crore rupees in Q3 FY25. Segment result, a loss of 7.29 crore rupees, larger loss than 11.45 crore rupees in Q4 FY24, but smaller loss than 7.96 crore rupees in Q3 FY25.
So, beauty is the clear profit driver, while fashion continues to post losses, which even widened in Q4. How does this look for the full year FY25?
For the full year FY25, consolidated segments, beauty segment, revenue 7,251.17 crore rupees, up from 5,809.92 crore rupees in FY24. Fashion segment, revenue 674.69 crore rupees, up from 568.30 crore rupees in FY24. Segment result, a loss of 124.54 crore rupees, reduced loss from 131.96 crore rupees in FY24. Other segment, revenue 23.96 crore rupees, up from 7.40 crore rupees in FY24. Segment result, a loss of 29.09 crore rupees, larger loss from 18.38 crore rupees in FY24. The investor presentation also highlights gross margin expansion across segments. For one Nykaa, it expanded by 134 basis points in FY25. Beauty segment GMV grew 55% year-over-year for House of Nykaa brands.
That paints a clear picture. Beauty is strong and growing profitably. Fashion is growing revenue and narrowing annual losses, but Q4 showed a bit of a setback. The other segment is small but growing revenue with increasing losses. The investor presentation mentions a GMV of over 15,600 crore rupees for FY25, up 25% year-over-year. What about segment assets and liabilities?
As of March 31, 2025, beauty segment, assets of 3,146.52 crore rupees and liabilities of 1,439.04 crore rupees. Fashion segment, assets of 319.44 crore rupees and liabilities of 185.45 crore rupees. Other segment, assets of 54.80 crore rupees and liabilities of 37.14 crore rupees. Unallocated assets were 458.77 crore rupees and unallocated liabilities were 975.24 crore rupees.
So, to summarize the performance, strong consolidated growth year-over-year for Q4 and FY25 in revenue and profits. Standalone performance, especially for Q4, was weaker. largely influenced by restatements and lower other income.
Exactly. The consolidated entity is benefiting from the growth in its beauty segment significantly. The fashion segment is still a work in progress in terms of profitability. The investor presentation also provides a lot of operational highlights. Nykaa added a record number of global beauty brands, expanded its physical store network significantly, 50 stores in FY25, total 237 stores, and the House of Nykaa brands crossed 2,100 crore rupees in GMV. Dot & Key, a key D2C brand, hit over 900 crore rupees GMV in FY25.
Those are some impressive operational metrics. Now, a crucial part, the auditor's report. SR Buttleyboy and Associates LLP are the auditors for both standalone and consolidated. What did they say?
For the standalone financial results, the auditors issued an unmodified opinion. They do have an other matter paragraph which highlights that the Q4 figures are balancing figures and, importantly, refers to Note 2BII regarding the restatement of corresponding figures for the quarter and year ended March 31st, 2024 due to the common control business combinations we discussed earlier, acquisition of athleisure and lingerie and western wear and accessories businesses.
Okay, clean opinion for standalone with a note on restatement. What about the consolidated financial reports?
For the consolidated financial results, SR Buttleyboy and Associates LLP also issued an unmodified opinion. Their other matter section mentions they refer to the audit reports of other auditors for 16 subsidiaries and 1 division. The financials of these entities reflect total assets of 467.93 crore rupees as at March 31st, 2025, total revenues of 199.70 crore rupees and 690.01 crore rupees for Q4 FY25 and FY25 respectively, and net profit after tax of 15.73 crore rupees and 82.82 crore rupees for Q4 FY25 and FY25 respectively. Their opinion is based solely on these other auditors' reports for these entities. It also includes unaudited financial statements for one associate, Earth Rhythm Private Limited, whose financials reflect a group's share of net loss of 1.63 crore rupees for the 9 months ended December 31st, 2024. The auditors state these are not material to the group for FY25. And again, the Q4 figures are balancing figures.
So, unmodified opinions for both, which is good. The reliance on other auditors for a significant number of subsidiaries in the consolidated report is standard for a group of this size. Any other significant notes from the financial statements we should touch upon?
Yes, a few important ones from the consolidated notes. Note 2 details the change in primary segments to beauty, fashion, and others from FY25, as we discussed. Note 5 mentions subsequent events. The merger of Illuminar Media Limited, LBB, into Nykaa Fashion Limited was approved by NCLT on May 27, 2025. The demerger of the eB2B business from FSN Distribution Limited to Nykaa eRetail Limited was approved by NCLT on May 9, 2025. These are strategic restructurings to unlock synergies. The investor presentation also details these restructurings, aiming to consolidate online beauty businesses under a single entity, Nykaa eRetail, and content creation/events businesses, LBB, with Nykaa Fashion.
That's a significant strategic shifts. So, what's the overall outlook and what are the potential risks for Nykaa based on these results?
Disclaimer: we advise investors to check with certified experts before taking any investment decisions. The outlook for Nykaa seems positive, particularly driven by the robust performance and continued expansion of its beauty segment. The focus on premiumization, new brand launches, and offline expansion are key growth drivers. The efforts to improve profitability in the fashion segment, while still ongoing, show some progress annually. The organizational restructuring should lead to better synergies. The strong operating cash flow generation in FY25 is a big positive. Potential risks include intense competition in both beauty and fashion e-commerce, sustaining high growth rates as the base expands. The fashion segment's path to consistent profitability remains a challenge. integration risks and achieving desired synergies from recent acquisitions and restructuring, dependence on discretionary consumer spending, which can be impacted by macroeconomic factors.
That's a balanced view. So, to wrap it all up, what are the main takeaways from Nykaa's Q4 and FY25 performance?
Key takeaways. Strong consolidated growth. Nykaa delivered robust year-over-year growth in revenue and profitability for both Q4 FY25 and the full year FY25, primarily fueled by its beauty segment. Beauty segment shines. This segment is the powerhouse, showing strong GMV growth, revenue growth, and improved profitability. Expansion in owned brands like Dot & Key is notable. Fashion segment improving annually, but Q4 weaker. While the fashion segment narrowed its losses for the full year FY25, Q4 FY25 saw a widening of losses. It's still a drag on overall consolidated profitability, but is growing its top line. Standalone performance masked by restatements. The standalone figures, particularly for Q4, look weaker, but are heavily influenced by significant restatements due to internal business transfers and lower other income. Healthy cash flows. Significant improvement in consolidated operating cash flow is a major positive. Strategic restructuring. The mergers and demergers indicate a strategic focus on streamlining operations and unlocking synergies. Clean auditor reports. Unmodified opinions for both standalone and consolidated results provide assurance, though the reliance on other auditors for subsidiaries is noted. Overall, Nykaa appears to be navigating a competitive market well, with its core beauty business firing on all cylinders. The key will be to turn around the fashion segment and successfully integrate its strategic initiatives.
Excellent summary. A lot for investors to digest there. Thanks for breaking it all down for us.
My pleasure. It's certainly a company to watch. And for our listeners, if you found this analysis helpful, don't forget to subscribe to our podcast for more financial deep dives.